you are welcome to another market review. We are looking at the week ended 9th of October 2020. And before I continue, I will say the market has really turned positive. And because it has turned positive, we are seeing a lot of prospect in the market. And this prospect we are seeing in the market is not as a result of economic activities or economic fundamental. This is purely, as a result of improved liquidity in the market. I've said earlier in the previous video for last week, and positive sentiment driving the market. And reason why this is so. It's just because the last MPC meeting was in favor of equity market. I will tell you, anywhere in the world where there is low interest rate, we are bound to see this kind of rally or this kind of market uptrend in the opposite market. We'll have the fixed income, we'll have the treasury bill, and when there's low interest rate in the economy, naturally it will affect those fixed income market. And because funds are looking for where they can make more return, I'll call it circular flow of funds, looking for where. On that note, funds are leaving the other windows for the equity asset because of one. Yes, you can hedge against inflation investing in equity, especially as I've shared last time, those companies that has potential to adjust their price up, and at the same time demand for their goods or services will still be there, and then they want to post a better number. That number, because their earnings are good, they want to pay a good dividend, that will naturally support their price to be up. And as an investor, you need to be in such stock so that you can hedge against inflation. As to speak now, inflation in Nigeria, as at the end of August, we have not seen inflation data for September. We're having about 13.22, which is high already, and most of these other windows return are below 5%. But naturally, they will move. And to crown it all, in this period, especially in this month of October, we're expecting more funds that will be maturing, especially from OMO, Treasury bill, and some bonds that are the period is also elapsing. They will be paying back this money to investors, especially those PFAs and other fund managers that are in those investment vehicles. As they come, I'm telling you, a right thinking fund manager will not like to plug back the same amount to such investment window where the rate is low, where return is low, where is already a negative return. They naturally want to move to where they can hedge against inflation, at the same time where they can make a faster return in a shorter period. For example, if you are in Zenith Bank, sorry, I've not started in the market data, but let me tell you, if you are in Zenith Bank, and that Zenith Bank is a bank that have been good in dividend payment and have been consistent, and let's say last year they paid 80 kobo altogether with their 30 kobo interim and full year 250 kobo, that is 280 kobo. And as we speak now, the price of Zenith is far below 25 naira. And that until you get to that 25 naira, that is where you can talk of 10% dividend if they repeat, or if they keep, they didn't grow their dividend and they said, okay, because of the pandemic, okay, let's play what we paid last year, 2019, and they paid 250 naira kobo. That alone will give you 10% if you are buying even at 25 naira. That means if you are taking position around 20 naira, 21, 22, 24, you are still better off in terms of dividend yield, especially for those PFA that are long-term investors, those that are looking at long-term, those institutional investors. For me, the market is ripe for those that can design and know where to move. For me, this liquidity that are maturing, that are coming off of maturity from OMO, as I've mentioned, Treasury bill, some bond, and all of that. The confidence in the system again is also another thing. Not confident because of the economy. Politically, we can see that things are gradually improving. If you look at what happened in other states, tell that politically people are okay. We'll see fair and clear election. Who to expect that at the end of Ondo election they should repeat such thing again? That will further boost confidence in Nigeria. As I've said, if you remember that the foreign investors, because of the exchange rate, they are some of them are having interest to repatriate their money back to their economy, and people coming in are coming gradually, and also the crude oil price has remained a bit stable despite that it's oscillating at $40, $41, and which also reflect in the recent budget that we said our assumption for for crude oil price in the 2021 budget was 40, which is for me is realistic. If you move to 50, then it will be a plus for us. And that as the global economy is gradually easing up their lockdown, we expect that after the second wave lockdown we are just seeing, we expect that things will move over there. Once that is happen, what that happens, sorry, not that happens, you see that activities for oil will also be a bit stable. And we'll see the more they open up the economy, the more consumption for oil, and we'll see that things will improve gradually. But before we go further, I want to quickly look at the market data for the week under review. I will tell you it was a bullish week. I will tell you this is the best market in the last 6 to 8 months of this market, the best week to compare. You can see that every stock, I'm telling you, we're looking up. We'll have more than 53 gainers for this period and less than 20 losers, saying that stocks are looking up. Yes, the market data as we speak, the Osher index that measure performance of the market for day, for week, for quarter, for month, for year, open for the week 26,985.77 point and closed at 28,415.31. This is after the index have broken different resistance level to touch as high as 29,117 within that same period. But profit taking pull the market down, which I said in the last video, we will see a little profit taking that will create opportunity for you and I to take position for those that are not in the market. That's why I said last week that you should not jump into the market. Let's expect a pullback, and we have seen that pullback this week now under review. That means as a smart investor, this is time for you to take opportunity because any season is around the corner. The first third quarter result hit the market on Friday from Infinity Trust Mortgage Bank, which I said earlier that the first fly they didn't get the results. Yes, if you look at the numbers is poorly missed to reflect the economic situation. There's a mortgage bank, there's a little decline in the top line and the bottom line. But for me, it's a sign that any season is already started. For me, we don't need to panic. This is time for you to take position. Like I said, if you have our mastering earnings video, you know what to do at this point now. Those stocks that you think that you expected them to post a better number, you should be in those stocks. And also, I tell you, once we start seeing this earnings season in the second week as we are entering, I'm telling you that momentum will change. That momentum that associated with earnings season, you see it all coming up, and you expect that if the numbers come better than expected, I see these numbers supporting price to move higher, and the liquidity we're expecting that only for the month of October, not less than 2.2 trillion will be maturing from different investment windows, Treasury bill, OMO, and bond. That was to provide, and this liquidity will not go back to that window immediately. They will go to a shorter place because if as I've said earlier, if you are investing in Zenith Bank to get the 2.2 naira 50 kobo dividend, and you are entering now, and you're going to wait for just between now and April or March, and it's less than 8 months than putting your money in Treasury bill to earn 3.42 for 364 days. It is shorter for you to make up to 10% in investing in those dividend paying stocks like QCAP. There are many stock like even Julius Berger. There are many that are above 10%. Africa Prudential, these stocks will give you more returns, and the pension administrators or fund managers, although they need where they can get good dividend and wait. And you know that the next, as I said, that the next MPC meeting will be in November. And the possibility that they were just interested up is very small because they want to see the impact of this low interest rate reflect on the economy so that our productivity improve. If you look at what we saw in the month of September, the NPR, that is the Purchasing Managers Index, you see that it was a little decline, a contraction. That means we will need to see that funds move to the economy, to private sectors, different sectors, to reactivate activities, economic activity that will support economic recovery. And if you look at also the 2021 budget, is more of what economic recovery. All the huge budget, yes, despite that there's some reservation in that budget, but we expect that the budget look more a bit, for me, realistic than what we have been seeing. If they are budgeting some things and they can work on revenue, see that things will improve in 2020 in terms of economic recovery. That also support the market going forward. But as I speak now, the market performance has shown a disconnection purely from the economic details and all those data or indices. For me, this is the time for you to take over. Since there's liquidity in the market, anywhere in the world, the major factor that drives any market is liquidity. That is strong. Then, as I said earlier, that 20% of what influences market comes from the company, while the 80% comes from what? the liquidity and what the performance of this each sector. These are the things we should be looking at as we speak in this market going forward. As an investor, this is not the time for you to sit back and be complaining, but rather take advantage of this, because this market is likely to recover. If you look at this Fibonacci retracement chart here, you can see from here to here, you can see where the market is at. It has broken different retracement lines. Now it's almost getting to 100 before there will be a normal breakout. This breakout will give us a boom, and I expect that this will break out before the end of any season. For me, this is time for you to take position in stock. This pullback is a wake-up development for those that are not in some position to take advantage of the market now and buy in. As I've said, don't miss this opportunity. If you are lucky to attend the last training that we did, which I said that stocks that will drive the V shape, I will tell you those stocks, go and check it. They are the ones moving, like wildfire. You need to be in those stocks. You need to be in those stocks. When I saw a lot of them, I was saying, fine. Those that attended the training and those that are buying the replay, they will see value for their money, because if you are in such stock into the quarter, the last quarter of the year, and in position even before the next training that will come in December, you would have made money. And in December, we're preparing to how you can take advantage of dividend paying stock for against 2021. That is called Invest 2021. I want to tell you that take advantage of all this video and all these resources or materials that are available to enhance your work to your position in the market. Like I said, as you learn more, you earn more. That is it. Learn more, you earn more. If you fail to learn, your rate of return will remain where it is. And that is why you need to grab information. You need to get information from the right source. Rub mind with people that you know that, yes, you can trust their judgment, you can trust what they are doing, and move ahead. That is how to make money. Don't say because, people are commenting on capital market, the economy is different. No, take advantage of what it is. Yes, the economy is not moving in the same direction, and it is not covered that at every time the economy will move in the same direction with the equity market or the stock market. For me, as an investor, you should not just panic, but rather take advantage of what you are seeing in the market. And also, if you look at the sectorial performance, I will tell you all the sector for this week under review, they are all in green. It's a sign that nearly all the sectors, felt the impact of what this liquidity that entered the market during the period under review. Every sector was touched because people were looking at value stock leading stock in it. Because I tell you, a leading stock in every sector is the first attraction. Look at those companies that are leading in each sector. They are the ones that people look at. Look at what has happened to Zenith and what has happened to GTB, and others are following. Also, go to other sector in the healthcare. So what happened to GSK? Check every sector. Look at the agricultural sector. Look at the insurance. Those stocks that these stocks are dividend paying stocks are what people are looking at. I'll tell you, because of the low interest rate, people are looking at stocks that will pay dividend even when there will be dividend cut in 2020. And also, don't forget that stocks like Airtel and MTN, those stocks are where also, if you look at, because of what the new normal in the system globally and Nigeria, that people are more on the system now than before. And if you're on the system, you need to pay more to stay there. And even though people are paying high for electricity, they need to work. But that means this sector is what also you're going to look at. And don't forget that Airtel pay interim dividend. You can see that Airtel have moved from 380 to almost 410. I can see the movement also in MTN. You as an investor, you should know where to put your money. And I believe those that have that had the first CD in April are smiling now to the bank. Even not only smiling, they will be dancing in the house, because those stocks that were recommended for recovering, for growth, for dividend, for defensive, all the stocks are also in that direction, looking up. You need to get all these materials so that it will guide you to take what informed investment decision. You are not to just follow bandwagon or people are complaining. You don't need to complain. Once you can get the right information, it will guide you, to move on in your investment. You really want to move on. That is the only way. Like I just said, that all the sectoral closing green, which but going forward, what we expect in the new week we are going, which we are going to use to round up the discussion. For the week under review, as I said, mentioned that 53 stocks were on the gainer chart, while just only 14 were on the loser side. It says that stocks were up because market gained almost 6%, because it closed at market gain 5.30% for the week under review, and that brought every other period on green. You can see month to date was on green of 5.9%. Quarter to date also was on green of 5.9%, while year to date is on green of 5.8%. It ate 6%. That is that this market has really gone up, and it has potential to go further up because of what level of liquidity that is entering the market. And this liquidity is chasing equity assets because of what? One, as I said, low return on other investment window. Want to hedge against inflation. Further, you and I should take advantage of this movement. You need to know, and there are some sectors you need to really pay attention to. Like I said in my last market review last week, that there are some sectors you need to look at. Those sectors you need to look at, consider them. The banking sector is attractive as we speak now. The insurance is attractive. The healthcare, the agriculture, and the telecoms are attractive as well. Yes, food and beverages or the consumer goods are coming up. Why the industrial goods, as more budget is being rolling in, and also despite the pandemic, those infrastructure you need to do them, and government going to spend, and people are still building. For me, I see that you can balance your portfolio looking at the sector that is active now and take position for what? For the future. But for those in buy and sell signals, you don't have issue because we already make these things available there for you. All you do is take time. Yeah, just like last week, we have a lot of sell signal, but we said let's wait and see before the market go back. But I'm telling you, for those signals that will be sell signal that will be coming next week, it's for you to take advantage of your profit. But like what we said, you must always set a goal and work with your goal, because we have a buy range and set target. We can give you signal. It's not left for you, because we also have to keep to what we are teaching, that you set a goal that is your target, even though the market rally up again. So far you have achieve what you want for that period. You sell off and move to the another one, especially when the market is going up. When you are selling up, there's another opportunity for you to jump in. For me, you have to balance your investment goal as you speak now. Don't go outside of your investment. Have a good investment buying strategy and selling strategy. Don't say because the market is going up, when you achieve your target, you decide not to sell. No. Follow your investment goal. Follow your strategies. When you have a price target to sell, exit and move to another one, because you have. Don't just follow by, because the way you follow stock up, if you fail to jump out at the right time, that same stock will break you down. That means you need to be guided by your investment objective. It's very, very important and key. Let your goal guide you when you are taking your investment decision. Like as I've said earlier, those stocks that top the 10 gainers for the week. One, internal oil. Internal oil is one of the stocks that top the gainers chart for the week under review, and you can see the movement of internal oil. You can see how it move here. You can see the movement of internal oil. Look at where it started. For me, it has complete this trend, and for me it's time for you to start selling off, take position, because it's a complete really a V shape. You can see that from here to here, the stock has moved to this level. For me, once it breaks out here, good. But at this point, like I always say, you can sell 50% of what you have and watch whether it will be a breakout. When I mean a breakout, you can see that this is a strong resistance level for this stock as we speak here now. Once it is a breakout at this level, you can now be thinking of how to go to hold. But at this point, you can take some profit and watch again. You can take 25% profit or 50, depends on your own, and move ahead. These are the stock that led the gainer start for the week. Again, it opened at 2.74 kobo and closed at 3.63 kobo, gaining 32.48%. Next was International Brewery. For International Brewery, I'll tell you, it's just market sentiment. The numbers won't support this price going further. If you are in such position, if you're a trader, you can start going up, because even the technical results we're expecting from the industry won't be as beautiful to support this price. If you are getting such return on it, you can still start selling and take your profit. Africa Prudential moved from 4.75 kobo to as high as 5.73 kobo to close the week with 20.63% return. Nationwide Express. I said it that this courier business are the ones that are really in business now because of what the new normal we are saying. Many companies are just selling online, and they need to move their goods across to their client or their customer. And only that, most of them also are going into investing in what we call a distribution chain that will assist to do a lot of things for business people to move their goods from one point to another and preserve stock, like Resta have invested, I said it, into another chain of that they can move perishable goods for instead of refrigerator, investing in that so that they can take advantage of. Now we are going into agriculture and we're becoming green in it, and we're becoming known for it, that yeah, that is our area of interest now. That means those who are moving their goods from one producer to preserve them, they are still in their Korea business or but this is another additional, and that was after their rights issue. For me, these are where you're looking at. The result we saw from rest. I expect that the tech quarter will be better than what that. For me, investors should also be looking at this Korea business area to look at. First Bank, which is the FBN holding, move from 5 naira 20 kobo to 620, gaining 1 naira. That is 19.32%. Then also Access Bank moved from 6 naira 70 kobo to 7 naira 80 kobo, gaining 16.4%. Within a week, these are enough, and this is what you can get within why we are waiting for a whole year to make what 30% in other investment window. Why in the bond we are waiting for many years to make just a return of 7%, max is 9%. No matter how long it is in the bond market, you can take advantage of the market now and make money. GSK was up there, gaining 16%, and NASCOM Align Industry also was there, gains 15.79%. Leakage Assurance, and then Northern Nigeria Flour Mill gained 14.8. It opened at 4 naira 5 kobo to close at 4 naira 65 kobo. You need to take advantage of this market movement. Before we go to show you the level of fund entering the market, I want to quickly look at the top losers. The top loser was led by UACN Property was the top loser for the period. Yes, this is a stock that that the controversy between the acquisition and the way the parent company is handling the information concerning that company. People are not really more, how will I put it, people don't understand what is really happening because information is coming in half bits. People don't understand what they go. Today they say they'll do this, next time they do. On that, investors are in dark in this company. On that note, you can see that it's also reflecting on the price movement. You can see that it's looking down already. You can see, it's looking at a top the loser chart for the week, losing 11 kobo. It opened at 92 kobo and closed at 81 kobo, lost 11.96%, followed by Triple G. Triple G, because of the markdown too within the period, also Triple G was down for 10%. And Deep Capital Management and Trust also was down. But you can see that these companies, for me, they are not active and investors. But you can see that impact of market sentiment or market forces is also bringing them down. People want to move their fund to other because you see that there's no sign here that people are waiting for what will I do. That's why I told you earlier that if an equity investor, after you have used your fundamental, your technical analysis, and if what attracted those stocks are still intact, you can hold on. But if what attracted into those stocks are not there, you can bail out. Even when you are lost 50%, you can come out. But if factors that attracted you are still intact, you can hold on. But that is why I say patient to come in. But if you see that factors that attracted you are not there, it's better you sell, even at 50% loss, to move to other. Konoye was among the top loser for the period. He lost just 5.57%. He opened at 15 naira 25 kobo, closed at 14.40. For me, it's a stock that you can start gradually looking at. Low Union and Rock, yet purely profit taking in that aspect. Jaiz Bank closed at 59 kobo to open at 62 kobo, lost 4.8%. This is just pure profit taking. Charms and Diagnostics. Owando is profit taking, I will tell you, because the stock moved from about 2 naira 7 kobo to about 240 or 238 before profit taking hit the stock, and it closed at 2 naira 23. For me, this is the time for you to look at stocks to start looking at and take position. As I mentioned earlier, the first third quarter result that hit the market was from Infinity Finance. But we want to look at the money flow into the market, because I tell you that the major factor that is driving the market is purely liquidity, nothing else. Liquidity and sentiment. And when there's liquidity in the market is bound to want to look up. I will tell you, for the last 6 years, this is the first time the market, money flow into the market as reviewed by money flow index at 95.23. You can see in 2014, look at the tires here, and market have broken different multiple tops of this of these indices. It tells that funds are entering the market and it's still looking up. We expect that the week we are entering, there are more funds will mature, like around today, about 300 billion will be expecting from one maturity. Is it from treasury bill again to come. Once it matured, I tell you that this also find its way to the market and also ahead of any season. And if these numbers beat expectation, we expect the market to go up. For me, this is not a time to panic, but buy right stocks. Like I say, buy right and sell right. If you know how to buy right, target those stocks that will deliver value and position. This is how to invest now. And those early filers as Infinity Finance, Infinity Trust Mortgage Finance has opened, Infinity Trust Mortgage Bank has opened the floor of kick off the third quarter earnings season on last Friday. I see that in the new week we are entering, we expect more. Those early filers to start coming. That is why you need to take position for stock that give you 50 kobo last year and is selling below 5 naira. Your yield is still high. These are stock. Look at it, it's a simple thing, and these are what will guide a lot of pension fund and other fund manager. Because one, don't forget that don't just invest for capital gain alone. This is a time as many people are throwing their defensive strategy away because they want to make it. No, you can also go defensive in this kind of stuff. That's why you need to get the video on those defensive stuff. Like as you know that the market is going up like this, still play defensive. Don't just throw to the wind and say because market go you can buy any stock. No, there are stock that PFAs should not buy. There are stock that fund managers should not buy. Those stocks, that will be attractive to them because there's in PFA, before they pay it, so the company has paid dividend for consistent for 5 years. It's a simple rule. That's one of the criteria they use in picking their stock. That means you need to look at those stocks that are consistent in dividend payment. And if you look at those stocks we said that will drive the V shape, will have the blue chips and good stock. And there are some good stocks that are paying dividend consistently, and those good chips that are paying dividend, you need to know those stocks and start positioning and look at the right price to buy. That's why you also need to be in the buy and sell signal so that you can get those stocks that as Udisha out for members of that group, that buy and sell signal subscribers, so that you can know what to do as at when due. Especially when it comes to equity investment, we don't marry stock. Once you make money, you sell off. Then you come back again. You can enter stock more than 4 times before a month end or before the year end because it is the trend that you are looking at. You are not looking at it. I want to when it goes to a top that you want to sell. When it pull back, you buy. You trade the trend. That's why technical analysis and fundamental are key when trading or when investing. Any good trader or investor that want to succeed must know how to combine the two. That's also if you really want to make living from trading, you need to equip yourself. Have those technical softwares to help you. Fundamental, you can get it anywhere, but also you can get fundamental analysis from Invest Data. We'll do company analysis to guide you. Economic interpretation will do that to guide you. But you need a key, especially the software, to know when it is resistant and when it is the support level, the area value of these stocks. Once you know this, you can equally take decision on your own. You can see this breakout from here. It tells you that funds are really. You can see this was the recent one that 2018 and 2019. Yeah, 20 okay, and early January this year. This was the highest. But market are broken it off, even to 2014 up. This multiple top have been broken off. It takes France and Germany. But at the same time, you need to also watch that to see when there will be pullback. But as we speak now, even the little pullback we are seeing has not reflected because that is on a daily chart. But on a weekly chart, the market is still looking. That's why we are seeing that the market is having 95.23 money flow points. At this point, it tells you liquidity is really strong in the market. We take advantage of this and position for good. I see that the market, going forward will be strong. As I said earlier, that once market crossed 27,000 mark, you see that the recovery and the bullish trend is strong, and it has crossed it, and we are seeing that it's likely to explode the maximum for the period. I gave a range. That range put about 32,000, and I said from 27 to 32, there will be different resistance that market to be, and which market I break to. Even though you have broken 29 and I came back again, we will see that it will gather that strength when earnings and more liquidity enter the market to break out. The possibility that the market to break out the Fibonacci retracement is high at this point. For me, you should just target this. That you can see that the breakout is very once the any season has kicked off now. We expect that it will break out this region. For investor, don't panic, but buy good stocks and wait to see what will happen because the market is really on uptrend. If you take a trend line here now, you see that this trend line, this is an up trend line that is going up. you can see that the market is really on what? On a strong bullish channel, and we expect that there is room for the market to hit this up here. You can see that this is a strong channel, is no, a bullish one for that matter, an uptrend channel that tells you that market is looking up. And if you look at all the moving average here, market is trading above 100 days moving average, which is this one, 100 days moving average, so that you can see. Hold on. Yeah, this 14 days moving average, this 20 days moving average, this 50 days moving average, and this 100 days moving average. Okay, this 100 days simple moving average, you can see market is trading above even the shorter moving average, which is 15, which is 7 days moving average, which is the real one. Market is above. The market is strong as we speak now. For me, there's no need for you to panic or to be afraid of the market, even to jump to cut your position. Only that you sell the ones that are moving up. You sell in bits. If a stock has potential to go more, you can really sell 25% or 50% and what? And move more money to another one, to another one, to start rallying again, so that if it pull back, you know that you are taking the profit to buy another one. This is a strategy that you should do at this point or adopt at this season. And this a daily chart as we speak. But if you look at the weekly chart from on this, you see that the market is also very, very strong here. On this on a weekly chart, yes, you can see that the market is also heading for that 100%. When you break out before market, we're talking of the top here, that's about 268. You can see where there's potential for the market to but don't expect it to move overnight and get to this top. There must be pullbacks, and here that pullbacks will create opportunity to buy, but always look at, because when the prices become higher and the earnings are not enough to support it, naturally there will be revaluation. But for me now, the earnings of these companies are strong enough to support as expected. But that means revaluation will not come immediately once the prices get to a level and see that the numbers are going far and the earnings are not supporting. Naturally, there will be revaluation of those stocks. But as we speak now, there's up potential for stock to go up. This pullback for 3 days is a good one. In a week of 5 trading days, it was up there, 2 days up, and still the market closed in green, and 3 days down for profit takers. I expect that by next week, these profit takers also will be taking position and market will go up, because more funds will enter the market to drive the market up to close a positive for the week we are entering. I expect that this earnings season, investors to take advantage of it, learn more, find new strategies to invest, because really we have lost money for, especially if you also look at the market has not really getting to where it started the downtrend in February. You know that in the month of January 2020, market was already on an auto drive before the news of the CBN increasing the CRR. That was the first when they increased CRR, that really affected the market. And after the first FPC meeting for the year, that slowed down the market. That same CBN also adjusted the interest rate down, that is driving the market. But when they increased CRR initially, that drove the market before the news of the COVID-19 hit the market in February 27. That will see this pullback, serious pullback. But today the market is but is yet to cover all it lost in for the month of February that's going now. But we'll speak that we're already in green, because market has crossed the March dip, and now we are in green. But I expect that once we break out this January high, and it's going to once break out, that means we have entered another rim for the year 2020. I know that this last quarter being the quarter for a lot of seasonalities. This quarter we're expecting Santa Claus rally. We're starting the end of the year adjustment by companies that are listed by fund managers. And you know that every quarter, as I've said, is always come with another pricing, because of the quarter is a very important period for the fund managers. On that quarter, they need to do adjustment. Now, in this last quarter, I said, it's a quarter that activities is on high gear because of the festivity period. Not only that, the Santa Claus rally will be there. The end of the year, Many companies that want to close higher than what they open will want their price to go. And if you see, there are some banks I know in the market or some companies that they always want to close higher than what they open the year. That is part of what they used to know in reporting in their annual report. For that, you take advantage of all this in this last quarter. At the end of the year, to usher us into 2021, which I would expect that to be better than 2020, because all this CBN bailout, the injection of funds, despite the mismatch policy we are seeing here, I believe going forward, they're able to smooth it and things start working together. In 2021, we expect that the recovery will be faster, and that also support the market, because if the recovery is faster and the economy is getting the impact, it also support the equity market. On this note, we'll say get your replay for the last seminar, get the master earnings video, and what the strategy to invest in in recession and changing market dynamics. If you get all these materials and study, I'm telling you, your investment knowledge will increase, and your profitability level will also increase. Thank you, and God bless you.